going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign of what's going to happen.
Welcome to the Crypto Teacher. And guys, I come with that video just to make you think. Now we have Jerome Powell speaking today. Now when cryptocurrencies came up, they talked about the United States dollar still being the world reserve currency. As we know on this channel, that is definitely coming to an end. But of course, when it comes to Jerome Powell, we want to make sure we get these stable coins, CBDC, Fed now payment system. They want to get it right. There's no rush. Why do they keep saying that, guys? On this channel, we know why. We know that China digital yuan is moving fast ahead. They're the leaders. They're going to be the world reserve currency. The United States dollar is over. We see all this money printing, guys. We can see it. We know for a fact we shouldn't have had the world reserve currency in the first place. There's only 350 million people in the United States. But the fact is that we use our military over in Saudi Arabia. And of course, with Saudis, they decided to move the oil with US dollars. What's going on with oil, guys? Why does Biden always say we're done with oil? That means that we're done with the US dollar. Guys, we're moving over to renewable energy. We're moving over to digital currencies. And China is leading the way to the fourth industrial revolution, Society 5.0. So remember, guys, when it comes to the New World Order, everything is planned out. Enjoy the rest of the video.
Crisis. And I want to say this, Mr. Chairman, I'm very encouraged by the indications from the Monetary Policy Report, progress that we're making as we come out of this downturn. We're looking at potentially north of 4% economic recovery, or as you and Senator Kennedy were just discussing, maybe even 6% growth for 2021. I find that very encouraging, albeit an uneven recovery. I feel that it's very good news that we're on the way. That also raises concerns that I have, and I'm sure it's been discussed many, many times, about the amount of liquidity that we're going to continue to pump into this economy. We have already allocated $4 trillion in coronavirus recovery relief, $1 trillion yet to be spent, and now we're talking about putting close to an additional $2 trillion into the economy. I won't belabor this anymore. It's been discussed by my colleagues, but I share their concerns about injecting that much liquidity into the economy at a time when we're in the process of recovering, particularly noting our tough and slow recovery after the 2008 recession, given the amount of funding that was injected into the economy then. Chairman Powell, I'd like to shift gears for a minute. Yesterday, Treasury Secretary Yellen talked about the digital dollar, a digital dollar that's overseen by the Fed. It's tied to blockchain technology, something that she said could result in faster, safer, and cheaper payments. You and I discussed the importance of the dollar as the world reserve currency on previous occasions. It's a vital asset for us as Americans. I would very much appreciate, Chairman Powell, your perspective on whether the Fed should develop a digital dollar that will be held directly by households, directly by businesses, and not intermediated by commercial financial institutions.
Thank you. So we are looking carefully, very carefully, at the question of whether we should issue a digital dollar. And it's something that central banks around the world are looking at and doing so appropriately, because the technology now enables us to do that. And it also enables private sector actors to create their own kind of digital quasi-money type of instruments. So there are significant both technical and policy questions to do with how we would go about doing that. I would say that we're committed to solving the technology problems and to consulting very broadly with the public and very transparently with all interested constituencies as to whether we should do this. I would also say we are the world's reserve currency, and we have a responsibility to get this right. We don't need to be the first. We need to get it right, and so but this is something we're investing time and labor in right across the Federal Reserve System. You may know that the Federal Reserve Bank of Boston has a partnership with MIT looking at one particular thing. We're doing research here at the board. It does hold out the prospect of the things that you mentioned, very positive. It could help with financial inclusion as well. At the same time, you want to avoid creating things that might be destabilizing or that might draw funds away from the banking system. We have a banking system which intermediates between savers and borrowers. We want to be careful about what the implications are of what we do. So a very high priority project for us.
I share your concerns on the need to be careful. I also appreciate the fact that you're going to stay at the leading edge of looking at this and making certain that America does not fall behind in any respect.
Ahead with the FedNow service, as we've discussed in previous hearings, the United States' outdated payment system is inflicting large and unnecessary costs on millions of American consumers, leading to billions of dollars of unnecessary funds spent. And this doesn't impact people with big bank accounts who are not close to overdrawing. It impacts those who are living paycheck to paycheck. So I see that the Fed has accelerated its timetable a little bit to 2023. If you can move even faster, all the better. You'll be saving millions of Americans lots of money in unnecessary costs.
Instruments like stablecoins and central bank digital currencies have the potential for much higher monetary velocities. So how will this impact the monetary transmission mechanism and collateral availability in the markets?
Well, we don't think that they will have much of an effect on monetary transmission. Actually, we've had tremendous amount of payment sector innovation for a long time, really, and monetary policy transmission continues to be about what it is. We change interest rates, and that works its way through the economy, and that supports economic activity or restrains it depending on where interest rates are. So we don't actually think there is going to be a tight connection between the Fed nows and the stable coins of the world. And I would agree with you. It's important to have collateral, and what we see in the markets is far from a shortage of collateral. There seems to be ample collateral if you just look at the rates that are being